An S-Corp can be one of the best tax-saving tools for a business owner, but only if you use it correctly. I see business owners make the same S-Corp mistakes over and over again, and those mistakes can cost them thousands of dollars in unnecessary taxes, missing deductions, penalties, or even IRS problems. So in this video, I'm going to walk you through 7 S-Corp mistakes that can cost you thousands and what you should be thinking about instead. My name is David and I'm a CPA and tax strategist, and I help small business owners save money on taxes and stay on top of their tax planning throughout the year. Before we jump in, please like this video, subscribe to the channel, and download my 5-step year-round tax checklist using the link in the video description below. That checklist will help you stay on track to saving more of what you earn instead of waiting until tax time to find out what you should have done months ago. Also, this video is for general education, is not for tax advice for your specific situation. Okay, let's get into it. Mistake number 1. The first mistake is thinking that forming an LLC automatically saves you money on taxes. In many cases, an LLC by itself does not reduce self-employment tax. A single member LLC is usually still taxed like a sole proprietorship unless you make a special tax election that means the business profit may still be subject to employment tax. The S-Corp election is different. With an S-Corp, you may be able to pay yourself a reasonable salary and take additional profit as distribution. That's where the payroll tax savings come from. So the key point is this: the LLC may give you a legal structure, but the S-Corp election is often what creates the tax savings. The second mistake is not paying yourself a reasonable salary. This is one of the biggest S-Corp's mistakes. Some business owners hear that S-Corp distributions are not subject to self-employment tax, so they take all the money as distributions and no payroll. And that is a big problem. If you work in the business, the IRS expects you to pay yourself a reasonable compensation before taking distribution. That does not mean every dollar has to be payroll, but it does mean your salary needs to be reasonable based on your business, your role, your profits, and the services you provide. The tax savings come from the balance between payroll and distributions, not from avoiding payroll completely. The third mistake is waiting until the end of the year to deal with payroll. A lot of S-Corp owners take money out of the business all year, but they do not run payroll. Then December comes along and they realize they need to clean up everything. That creates stress, messy bookkeeping, and sometimes penalties. A better approach is to run payroll during the year and review it as your profit changes. It does not mean you have to do weekly or bi-weekly payroll. Some owners use monthly or quarterly payroll, but the important thing is having a plan before December. Mistake number 4 is mixing business and personal expenses. If you have an S-Corp, you need to treat it like a separate business. That means separate bank accounts, clean bookkeeping, and not using the business like your personal checking account. When personal and business expenses are mixed together, it becomes harder to claim deductions, harder to support the tax return, and easier to make mistakes. Some personal expenses may have a business component, such as a home office or your cell phone, internet, or vehicle use, but those should usually be handled through proper reimbursement methods, not by randomly paying personal bills from your business account. Mistake number 5 is not having an accountable plan. This is a big one for S-Corp owners. If you pay for legitimate business expenses, your S-Corp may be able to reimburse you, but it needs to be done properly. This can apply to expenses like home office, business mileage, cell phone, internet, meals, supply, and subscriptions. For example, with an S-Corp, the home office deduction is often handled through reimbursement from the corporation rather than taking the deduction directly on your personal return. When done correctly, the corporation may get the deduction and the reimbursement may be tax-free to you. But if you do not have a system for this, you may miss the deduction or create a messy tax treatment. Mistake number 6 is ignoring retirement planning. Your S-Corp salary does not only affect payroll taxes, it can also affect retirement contributions. If your salary is too low, you may limit certain retirement plan opportunities. If your salary is too high, you may create more payroll tax than necessary. So your payroll decision should not be made in isolation. It should be coordinated with your overall tax plan, retirement goals, cash flow, and your business profit. This is one reason why S-Corp planning should be reviewed during the year, not just when the tax return is prepared. Mistake number 7 is the biggest one, not doing tax planning during the year. Most business owners think about taxes when it's time to file their return. But by then, many of the best tax saving opportunities may already be gone. You cannot always go back and fix payroll. You cannot create mileage logs you never kept. You cannot always make retirement plan decisions after the deadline, and you cannot make smart estimated tax decisions if you never looked at your profit during the year. An S-Corp is not magic. It's a tool. And like any tool, it only works if you properly set it up. That means keeping the books current, reviewing profit, monitoring payroll, tracking reimbursements, and planning before year end. So those are the 7 S-Corp mistakes that can cost you thousands. Thinking an LLC automatically saves taxes, not paying yourself a reasonable salary, waiting until year end to fix payroll, mixing business and personal expenses, missing the accountable plan, ignoring retirement plan strategies, and not doing tax planning during the year. Avoid these mistakes can help your S-Corp actually do what it's supposed to do: save taxes, keep you compliant, and help you keep more of what you earn. Again, make sure to download my free 5-step year-round tax checklist using the link in the video description below. And if this video helped you, please like, subscribe, and share it with another business owner who has an S-Corp or is thinking of becoming one. Thanks for watching, and I'll catch you on the next one.